What's up, everyone? Hope you're having a good evening so far. So, due to all the uncertainty today, we're going to go ahead and dig into the unusual options activity market-wide and visualize it using Excel and the Discord data that we've collected over the course of this month. This is why I made the consolidated unusual options channel, is so that I could easily collect all the data in one fell swoop, and then we can look at it via visual analyzation to try and catch this next price action in the next couple of weeks, because as we all know, as things are pointing to, later this year should be exactly what we've been thinking and preparing for. Just remain patient, and I'm going to show you real quick how we can utilize the power of our Discord to hopefully catch some outliers in the data. So what we have here on the left hand side is about 1,084 or so different feeds, right, on unusual options specifically, and it's market wide. And let's get the exact number. I think it's 1,180. But how we're going to convert this data into a visual format is, as you can see here, I have the column headers already typed out. So whatever you want to put in your table, make a header for it, and then this is the trick that I like to use to easily do this. So basically you just put any two letters. I like to just put my initials and then do the column that it's in, which is column A, and then put the corresponding row number with the data that you want. So we want the ticker, that would be A7. We want the sentiment, which would be CMA9. We want the strike, which would be 13. And then we want the contract, expiration date, volume, and interest. So we can just drag this here. And then we want 19, 20, 21, 22, and 23, and 24. 19 to 24 reference price. And then last but not least, we want 28, 29, and 30. Okay, so now we have the first row done. We have to do two though, because we need Excel to recognize that we're doing a pattern. So the next one would be 41, 43, and then we can just use the numbers up top to basically do the rest. $47, and then here would be CMA 48, and we just follow what we did on the first row. And then 62, 63, 64. Okay, so now we have two rows, and all we got to do now to get the entirety of these UOA options where we can analyze them is just take this and drag this down to about 1,100 in this case. That's how many we have. I'm just going to stop right here just to be safe. Right there. And then when it all comes down, you hit Control F, replace your initials or whatever two letters you put with an equals sign. Replace all, and boom, there you go. Now you have a table that's ready to go, and now we can analyze this. So I've already actually got the table printed out in another tab. I was just demonstrating for those who wanted to learn how I got this data. I wasn't just pulling it out of my ass. This is how it was done. So now we have every ticker, whether it was bullish or bearish, the strike price, the contract type, expiration date, volume, open interest, the size of the order, and price at the time, premium, trade side, consolidation type, trade type, reference price, whether it was unusual, whether it was golden, and whether it was a new opening position. So now, using the table, I'm going to make one real quick. We can now just hit one button and we can visualize this. Let's take a look. So auto execution is, it's pretty normal for it to be the most often and most frequently used order type. The next is a leg floor spread. So this is when you have some further knowledge into the markets. If you know what this stuff is, you can kind of rank in your head what the market participants are doing at this point in time. But that's just one aspect. Let's see what else. We got about 9 results. SPX appears most often. That's self-explanatory because tech is obviously the entire, basically it's center stage of this entire last 2 years. And then, of course, the expiration date that sticks out is going to be your September 16th, which is just before the FOMC meeting. It's the Friday before the meeting. So I'll link this in the group, but you can take this data and you can use it in several different ways. I'm going to do this as well with the golden sweeps as well. But yeah, pretty cool stuff. Endless possibilities when you have data solutions capable of visualizing data at this level, market-wide. So here it's just basically showing you that a blue line is the consolidation type, which is a block. And then you also have a consolidation type split, which is the orange, and you have sweep, which is the gray. So as you can see here, block has been the most prominent. And really, I probably should have cleaned this data up because the heading of the stuff in here, I could delete contract type and just leave it at put or call, which I will do that later on. But if we look just at consolidated contract type, put versus call, and this is regarding unusual options. Expiration date, by far the most is September 16th. The next is August 26th, which was today. Then you have 19th, which is already passed. Then you have the 9th. For a grand total of 664,505, and then you can also add additional metrics, like if we wanted to add open interest or size or volume, we can do that. Strike. And then you have a list of puts and the strike prices that these unusual options were created at. Trade side. And not only that, you can organize it by side of market as well. So a lot of things you can do. If we wanted to go by expiration date here, pretty easy to do. August 19th, 26th, 16th has the most by far. And it's simply because it's the one before the FOMC. If we want to go open interest, we want to look at the strikes in order of open interest, see which ones are the most heavy as far as OI. Oops, other way around. I think I need to put this as a number here. But anyways, you get the idea. Pretty cool stuff. Yeah, I'll link this in the group, and yeah, guys, utilize the stuff we have because, again, if we could just make it till the 16th, 21, we're pretty positive we're good with the setup we have. So, anyways, y'all have a good one.